What's up, everybody? It is Monday, December 8th. Hope you had a nice weekend. Not much to talk about. My video on Friday, I did mention that I was getting cautious based on three different things. Number one, there was a stall in the flows, in the leading flows, okay? And I think that may start to subside because I looked at the data that came off of Friday's Treasury statement today and it looked to be improving. But like I always tell you guys, I never make a determination from one day's data. But anyway, there was a stall in the flows. Sentiment was another thing. Remember, I have been saying that we saw a big drop in bearish sentiment on the part of individual investors last week. Biggest drop in 25 months. Bearish sentiment fell to the lowest level in 11 months. And bullish sentiment popped up to the highest level in 3 months. So like that's a good setup, contrarian setup for a correction. It's not a big deal. But I said that most likely we would see a correction. That's why I said I got cautious. Okay? And the other thing was there's a tax drain coming up on the 15th of December. All right, that's still, that's a week away. So we saw a pullback today. And I'll just reiterate that the numbers that I saw in the fiscal flows today off of the Treasury statement, they look not bad. So a perfect setup, I think, would be we get a trough in the flows, in that tax drain on around December 15th, December 16th. That's what happened last year. And then we have a positive or a bullish monetary environment going into mid to the end of February 2026. I think I also mentioned that many of the provisions of the big, beautiful bill, they kick in on January 1st, 2026. That's all this stuff like no tax on tips, child tax credits, write-offs for businesses. So there could be a pretty significant fiscal boost in the new year. So keep that in mind. Beyond that, I want to talk about bond yields because it's bothering me. I got to be honest. I mean, today, what do we get? Like a 10-year benchmark at 419 with a policy rate at 375 to 4 and the Fed about to cut rates again on Wednesday. This is about as extremely out of whack as anything we've seen so far this year in 2025. There's no way that the 10 years should be up this high. And this is being driven by a number of things, in my opinion. First of all, we got this cockamamie statement that was put out last week, and it circulated through the media and everything else, that the Fed is going to do a hawkish rate cut, whatever the hell that means. I mean, you might as well have that in some George Orwell book. It's just like, if you want to twist language into something completely nonsensical, what the hell is a hawkish rate cut? So here we see again the language coming out of the Fed. And I don't know if this is kind of, pushed through certain people from the Fed where they say, hey, talk about it like this as a means of further influencing market rates without actually coming out and doing anything. Actually, they are going to do something. They're going to cut rates. And so we have that. We have all this noise about who Trump is going to nominate for Fed chair. I think it's Kevin Hassett. I don't know. I was watching the Oval Office ceremony with the Kennedy Center Awards people. You had Stallone in there. You had George Strait. You had, what the hell's that band? So they were, and I thought I heard Trump say, well, should I say it? Kevin Hassett, is it okay to say it? I thought I heard something like that. I'm pretty sure it's going to be Hassett. But anyway, there's this noise percolating out there about like, we can't have Kevin Hassett because that's going to wreck the independence. Stop now with this stupid independence of the Fed, okay? I'm so sick and tired of hearing about this crap. The FOMC members are all nominated by the president. This is a political process. The head of the Fed chairperson is nominated by the president, has to be approved by Congress. All the FOMC members who end up voting, they have to be nominated and they have to be confirmed. The Fed has to turn all of its profits over to the US Treasury with the exception of what it needs to operate. Talking about independence is ridiculous. Independence on what? Setting interest rates, which, fine, but that's just like a stupid thing that was kind of, mandated to the Fed with the Humphrey Hawkins Act. What was that, like in 1978 or in the 70s, where basically Congress just ceded its responsibility of economic management over to the Fed and said, here, you guys deal with it because we don't want to deal with it. And what tools does the Fed have to manage the economy? Setting prices via interest rates. I mean, that is so ineffective that it's ridiculous. If you have an oil shortage, if you have a labor shortage, if you have, the Fed cannot create or mitigate or change those things through the very blunt, ineffective instrument of setting prices via interest rates. When the Fed was created in 1913, the Federal Reserve Act, basically what it was a lender of last resort, okay? Because we went through the panic of 1907, and that's when a bunch of big bankers led by J.P. Morgan and a bunch of big New York banks stepped up to support the market when there was a panic. And why do you think this panic happened? They happened regularly during the 19th century because all banks were allowed to kind of issue their own currency. Okay, we had 14,000 different kind of currencies in the 19th century. All of that really was metal backed, silver or gold. And what happened was, they were supposed to hold ratios of the metal relative to the amount of specie they issued. And of course, there was no oversight, there was cheating, and eventually you had booms and busts every 10 years. Bank panics and busts every 10 years. So the Fed was created after the 1907 panic, and basically its job was to regulate the financial system and be a lender of last resort. Now with this stupid Humphrey Hawkins, it's like, okay, Congress says, now you're going to manage the whole damn thing. Not us, fiscal policy. They can, do things directly through fiscal policy, through hiring, that kind of stuff. So it's idiotic, this concept of the independence of the Fed. So getting back to this noise that's out there circulating with respect to people fretting, scared, concerned about Hassett. And I know who these people are. I mean, I don't know them personally, but I can guess. These are all these hedge fund guys who are short. If you look at, like I said in my last video, if you look at open interest in the 10-year note futures contract, it's near a record level, almost 2.4, 2.5 million contracts. Okay, net. All right? That's enormous. And these guys are afraid that if somebody like Hassett comes in and starts cutting rates, it's going to smoke their positions. All right? They're going to get creamed. And so now all this chatter about, hey, you can't put Hassett in there because that's going to wreck the independence. Screw the independent. It has nothing to do with independence. It has to do with these guys having a short position and they sell every single rally. I've been saying this for months and months. Every time the bond market rallies, they step in and they sell more. And this guy, Powell, he's been enabling that. He's been allowing this to happen. Now, some people are talking also about what's going on in Japan with the 10-year Japanese government bond at like 3.3%, which, is historically high. But it's 3.3%. And they're trying to draw the conclusion that, hey, it's because Japan has this huge debt. They don't have any debt, just like we don't have any debt. Everything is yen, and it's held in the form of Japanese government bonds. It's something like 1.4 quadrillion. Japanese bond yields are rising because the Bank of Japan is raising interest rates. Hello. That's the reason why Japanese bond yields are rising. We do not have that situation here in the United States. We have a Fed, a central bank, that is cutting interest rates. But now, because of all this idiotic, backward, and completely misguided and stupid understanding about monetarism, which is a mental illness which is out there everywhere, CNBC, in the media, Fox Business, all these idiots who they parade along their shows talking about how we're going to be in big trouble because of the debt. And so what happens? These idiots like Gundlach and Drunkenheimer and Paul Tudor, all these people, they're going short because that's their belief system. They're married to that idea. It's a totally wrong, backward, upside down understanding. So this is why rates have backed up, all right? It has nothing to do, we don't see any increase in inflation, at least in the numbers that the Fed follows. We've seen a market deterioration in the labor market where Powell, back in August, if you remember, he went out to Jackson Hole and he made that big speech about, hey, now we're going to follow the labor market. And we had a huge rally on that, I remember, in the bonds. And now all of a sudden that's not important anymore. Like me personally, I can't wait for this guy to get out of there because he has been terrible. And I've said this before. I've been around for 46 years in these markets. I've seen, from Volcker, even before Volcker, all the way to this guy. Volcker's the worst only because of what he did with shooting rates through the roof, and he destroyed our industrial base. That was the beginning of the end of the U.S. industrial base. They moved everything offshore with this idiotic 20% interest rates, which only drove up the price of the inflation rate, to record levels. But this guy here, with his flip-flopping and his terrible communication and his stubbornness and his vindictiveness and his pettiness, he's got to go. Just unbelievable. Every day when I think I've seen it all, this guy comes back and spews, some more garbage that comes out of his mouth. The hawkish rate cut. What the hell is that? Is what I want to know. So if you're wondering what's happening with the bond market, that's what's happening with the bond market. Anyway, that's it for today, folks. My flight to LA was canceled, so I'm going to go tomorrow. No reason given. I don't know. It was just canceled. So thanks for watching. Please like and subscribe. And don't forget to go to my website, pitbulleconomics.com, and sign up for a 30-day free trial to MMT Trader. See you tomorrow. Bye.